Hey everyone, John Henry here. Today we're going to take a look at how to trade to get free coins and the best way to invest long-term in the companies and coins that you love. So first of all, what do I mean by free coins? Well, technically nothing is ever free, right? There's always a cost. What I mean by free coins is simply that you're going in and you're taking a portion of your trade and leaving it on the table. So an example, if we were to kind of break this down a little bit further, we would say, look at a coin, one of our favorite ones. The example I'm going to be using is Tron, that's TRX on Binance. But what we're looking at here is we're going to take an approach of a long-term trader along with being able to trade it intraday. So this would be a good way to use this type of trading strategy. Really is more designed for day trading along with combining a good company that you really believe in. You know, if Tron is one of your favorite companies, or Cardano or Bitcoin or whatever your favorite one is, you want to be able to day trade it as well so you can make money on the intraday swings, but we also want a way to hang on to some coins that we can throw in the bank and just kind of leave alone for a while and let them grow in value. So the best approach, in my opinion, is to do this in a couple different ways. First of all, we're going to find a location to trade just like we always would. So trade like normal, right? There's nothing that we really need to do here. It's all the same thing. We're looking to take the same trade, whether you trade Fibonacci's, stochastics, whatever. Doesn't really matter. We're looking to find a trade. After that trade has been taken, we're looking for our first target. Right? So target 1 in this example, we're not going to take the full amount of coin off. What we're going to look to do is try to recoup our initial investment. So let's say as an example, our initial investment was $1,000. Well, when we get to target 1, I want to have coins left over and I want to recoup my initial $1,000 investment. So what I'm looking to do for target 1 is to make back that initial investment of $1,000 while still leaving me a little bit of extra coin in the bank, right? Now, preferably you'd want that to be 60 to 70% of the position because you still want to be able to play with a little bit on the back side of it so we can kind of move it around and make a little profit on the trade as well. But this is a really good way to start. Target 1 is equal to or greater than our initial investment cost. Target 2 then is going to be taking a little bit of the remainder of the position off. This is the actual trade portion, okay? So the trade portion, let's say as an example, you know, off the $1,000, we recouped our $1,000 and that leaves us with about $200 left over. Well, if we take 50% of that position off, we make $100 on the trade. Right? Easy peasy. We made $100, we locked in our $1,000 initial investment, and now we're looking to hang on to the remainder of the coins, right? These are our HODL coins, our hold on for dear life. These are the ones that have basically been given to us for free. We got into the trade. Our initial risk was $1,000, right? That's how much we bought it for. It goes up in our direction. We take our money off the table. We recoup our initial investment of $1,000. So now that we are risk-free, in a sense, we still have money on the table because we still hold coins, but we've recouped our initial investment, so that money is quote-unquote house money, if you will. On target 2, we're relieving a little bit of pressure. We're taking some off the table so that we can feel good about ourselves, right? Take a little bit of profit, you know, feel good about the trade, and then target 3, we hang on to them, forget about them for a year, and come back to them, right? Those are the long-term ones. Now, that means that you only really held $100 of free coins, but at the same time, that $100 of free coins, that can be a huge, huge thing later on, you know, 6 months from now. It might only be worth 2 or 3 cents right now. It could be worth $2 or $3 later on down the road. So let's take a look at a real example of this in place. First of all, this is Tron, symbol TRX on Binance there. And we were looking at this trade on a pullback zone. Now, the pullback zone was kind of an area of interest that we were looking to buy into this dip down here. And if I look at my trade history, it should show in there. Yeah, we bought it at 255. Right, so I bought 14,645 coins at 255, and I sold out of them at 291. But notice, right, I bought 14,645 coins. I only sold 13,000. Look at the investment total here, right? It cost me 0.0373 to make that trade, and I took my profit on most of the position, banking 0.03783. So I actually made a little bit on this initial investment, and now we're holding free coins that we don't have to worry about. So not only did we take 12% on the position run and recouped our entire investment that began with, including a little bit on the top there, not by much. But now we're holding free coins, right? We have 1,631 coins that are active right now that are just house money. It's free. So that may not seem like a lot, but if you use an example like ADA or Cardano, if you're not familiar with that, that was a 2 or 3 cent coin. I think it was a 3 or 4 cent coin, actually, that we were long-term buying into, and it finally got a beautiful pop. And when I say beautiful pop, I'm talking about 50 to 60 cents, okay? This is a monstrous run. So if you were to take this exact same position, right, the position value in this case, 1,631 shares right now, I mean, we got into it at 255 Satoshi, so that was only, maybe 3 or 4 cents a piece. Now it's worth 7. It's gone up almost double in value for free, right? So initially it was only leaving about 50 or 60 bucks on the table, but now that 50 or 60 bucks is worth 120. And if this goes up even further, let's say it goes the same route as ADA, okay? So we have a 50 cent coin, 1,631 coins at 50 cents. Now you have $815 for free. You left that money alone. You just kind of let it do its thing and sit there and kind of hang out for a little while. You made a little bit of profit on the top of the trade, and you just let it run. And you can turn 50 bucks into 800 pretty easily in the crypto markets, especially when they go crazy, as long as it's a company that you believe in. This isn't something you're going to do on every single market, of course, but this is a great way to build a position in a longer term type of portfolio that you're looking to hang on to while also day trading. Now, in this case, I bought this and pretty much just covered my initial cost and left the rest. I didn't really care about taking another extra piece of profit just to leave it alone. That doesn't really bother me. For me, I'm looking at this thinking, okay, well, I have 1,630 coins. It's basically about $50 of initial investment that was given to me for free. I'm going to hang on to this and see if we can make it into something more. So now, because it didn't cost us anything, it's free. I don't have to worry about it. The stress is gone, and I think that's a big part of this. And what makes this so useful is that there's no more stress. There's no more, oh man, look at my portfolio. It's gone up and down, hundreds of dollars. It doesn't, there's just not as much pressure. It doesn't matter because, well, they were kind of given to you free in a sense. I guess you paid for commission, but that's about it. So it's a really great way to approach the markets in a long-term position that you're looking to hang on to for a while. And it's a way that, well, you can build a nice position and still be able to day trade along with it. Definitely something to keep in mind, keep in the back of your head. Maybe keeping an extra 10 to 20% after you've placed the trade and gotten out might be a nice way to kind of build in and let those trades go on for a long, long time to come. So that's going to do it for this one. Hopefully you found it useful, entertaining, and interesting. Maybe something you can add to your tool belt. Until the next one, we'll see you all then.